Today we're going to talk about closing entries. Okay, so I've drawn out some T accounts here for this very short problem, and a couple of things to point out. First of all, there's no closing for the assets, so those stay exactly as they were, and no closing for the liabilities either. They remain open. All of the closing happens in owner's equity. There are four journal entries that we make to close the books. And the first of these is to make a debit to service revenue for its balance of $18,000. Credit the income summary account. Income summary is only used during closing. So take a look at what happens here. We make a debit to service revenue. We'll call that transaction 1. Credit income summary, transaction 1. Step 2, we have to close all the expenses, so we're going to have to debit the income summary for the total of the expenses, which would be $6,000. And we have to credit each expense individually. So credit advertising expense for $3,000, rent expense for $2,000, and utilities expense for $1,000. Take a look at what happens. The income summary gets debited for $6,000. That's the total of the expenses. This is entry 2. Credit advertising expense for $3,000 on entry 2. Credit rent expense for $2,000 on entry 2. Credit utilities expense for $1,000 on entry 2. Notice that at this point, the revenues are at 0 and all three expenses are at 0. We have the revenues of $18,000 on the right side of income summary and $6,000 of expenses on the left. The net income then gets closed to the capital, be a debit to income summary for $12,000, that's your net income, and credit the capital account, Jones Capital, for $12,000. That's going to move $12,000 out of income summary. This is entry 3. And moves that $12,000 into the capital account, entry 3. So at this point, everything that's in that box there is at 0, and the net income is now in the capital account. Final item, we have to debit the capital account for the amount of the drawings, which is $2,000. Credit Johnson Drawing, or Jones Drawing rather, for $2,000, and this will be entry 4. Debit Jones Capital $2,000. Credit Jones Drawing $2,000. That closes the drawing account. And notice that you could summarize what happened here with a couple of arrows. The net income moves to the capital account, and the drawings move to the capital account as well. So there's only one account left open at the end. It'll be the Jones Capital account, and the ending balance will be 22 minus 2, or 20,000. Just squeezing that in here. And so 20 plus the liabilities would be 23, just balancing the assets. So 4 closing entries, and a new account that you haven't seen before called income summary. And if you ask somebody what's the purpose of income summary, it's to summarize the net income. Revenues go to the right, expenses to the left, and then you transfer that balance, which will be your net income, into the capital account. Okay, that's it. Thank you.